Hello everybody, I'm John, this is JP Strategic Investments, and today I want to talk about a strategy that I've started to use in my account over the past week or so. And if you've been following the channel, you know that right now I own pretty much just three stocks. I own Tesla, CrowdStrike, and Patriot One Technologies. Now, I do have some smaller options plays here and there, but overall, the vast majority of my money is in those three stocks and in cash. Right now, I have about 35% or so of my portfolio just in cash at the moment. But as we all know, in the current environment with inflation, with interest rates set to rise, we have a lot of downward pressure on growth stocks, especially higher growth stocks, and especially growth stocks that might not have a lot of profits or even any profits at the moment, which CrowdStrike and Patriot One Technologies fall into that category. So even though I think the stocks in my portfolio will perform well in the long term, in the short term, they might kind of just hang out where they are right now, maybe even go down a little further. And so I've been looking for a way to kind of take advantage of the current situation, maybe hedge my bet a little bit, as well as just make some extra income in case we don't see a lot of growth from these stocks in the short term. And I think I've found that with the strategy that I've started to use just recently. So let me get into kind of what I've been doing here. I have right in front of me on the screen that you guys can see right now the Invesco QQQ Trust Series 1. This is, QQQ. It's the ETF that essentially tracks the NASDAQ. And there is actually a leveraged ETF, in this case a triple leveraged ETF that is called, or it goes under the ticker TQQQ. And basically this is a leveraged ETF, and if you guys aren't familiar with those, essentially they use futures and options and things like that to essentially try to double or triple usually the performance of a certain underlying asset, in this case the QQQ ETF, which is tracking the NASDAQ. So basically, if the NASDAQ or QQQ goes up by 1% in a day, the TQQQ stock will go up by roughly 3%. And if the NASDAQ goes down by 1% in a day, TQQQ will go down by about 3%. So basically looking to triple the daily performance of the NASDAQ up or down. So let me kind of get into what I'm actually doing here. What I'm doing is selling a variety of options. And the first thing I'm doing here is selling credit spreads on TQQQ. So the thought process here is I own high growth stocks, and if high growth stocks do well, then my stocks will very likely do well. And so the money that I were to lose on these credit spreads would be relatively minimal in comparison to the money that I would make on the stocks that I currently own. If the stocks that I currently own don't do that well, if they kind of stay where they are, go up a little bit, or go down a little bit, then I will make income from these credit spreads. And the credit spread that I am currently looking at right now is the 50-55 credit spread. And you can see here that would give me a total credit of right about $100. Remember, if you're not familiar with options, this is all going to be multiplied by 100 because each options contract controls 100 shares. So I'm getting basically $100 each month. This is 1 month out for selling these credit spreads. And so right now I am selling two of these. And so basically what this means is unless TQQ goes up by about 20-25% or so, which would mean the NASDAQ itself would have to go up about 7 or 8%. Unless that happens, I'm making $200 a month from selling these two credit spreads every month. And if the NASDAQ does go up 7 or 8%, based on my math, I'm going to make far more from the stocks that I currently own than the money that I would potentially lose on these credit spreads. And I've actually done even more than this though. I'm actually going and selling puts as well. And if we go down here, you guys can see what I have done is sold the $30 puts here. So I've actually sold two of these as well. And if I go to sell, and go here, so you can see I'm selling each one of these for a little over $100. Remember, again, this is multiplied by 100 as well. So I'm selling two of these puts, and what this essentially means is that if TQQ were to drop down to that $30 level or below that $30 level, I would be purchasing 100 shares for every put option that I sell at about $30 per share. So about $3,000 per options contract that I hold. And so with this position, unless TQQ drops about 35%, or in other words, the NASDAQ were to drop over 10%, I'm gonna make $200 a month from the 2 put options that I sell here at the $30 level every month. And if the stock does drop all the way down to that level, then I am perfectly fine picking up some of those shares there. I'll probably sell puts down even further after that, because at that point we're probably looking at some pretty extremely low valuations on these tech stocks, and I am more than willing to get in at those valuations. So just to recap here with this entire strategy, if I am selling 2 of these $30 puts and I am selling 2 of those 55 credit spreads, which by the way, depending on where the stock moves throughout the next month or 2 months or whatever, those levels that I'm selling it at might change, but basically the distance from the stock will roughly stay the same. So if the stock moves up a little bit, maybe I might sell the $35 puts and I'm selling the 65 credit spreads. Doesn't really matter. Basically, using this strategy, staying a good distance away from where the stock is currently trading, because of the current volatility levels and because of the situation that we're in, I'm able to make about $400 a month just from selling these options. And to the upside, there's really not that much risk at all, because I'm going to net make money, right? The money that I make from the stocks is going to be far more than the money that I would lose from the option. So I'm basically just slightly limiting my potential gains. And on the downside, if I'm willing to purchase shares at those levels, then there's not a ton of risk as well on the downside. So this is kind of what I plan to do for the foreseeable future with TQQQ. Let me know in the comments below what you guys kind of think of this strategy, if you might be doing anything similar, selling credit spreads, what you think tech stocks in general might do over the next several months or year or so with interest rates, with inflation, everything that's going on. I'd love to hear what you guys are thinking about that. Other than that, I hope you found this helpful. If you did, hit the like button. Don't forget to subscribe, and I'll see you guys next time. Have a great day.